Hi, my name is Mike from 101 CPA, and today we're going to be talking about the different options that you have as a business owner when you're forming your business. What structure, what form do you want your business to take? And there's several. The most obvious one is being a sole proprietor. There's no state filings, you just go into business. There's no double taxation, you're not a corporation. But there's a big negative, and that's in terms of liability. You can be personally liable for the debts of the business. And that can be significant. You can actually lose your home, your personal assets over the debts of the business. For that reason alone, I tend to stay clear of sole proprietorships. I think there are other options that you can take that will offer you protection. There's partnerships, which can be general. They're governed by partnership agreement. And that's the main thing with a partnership. That agreement is going to govern the life of the partnership, what happens. It's not like a sole proprietorship. You do as you see best, as you think best. You set the direction. There's other people involved that have an ownership stake in there that, you want to make sure you're on the same page with them. With the general partnership, all of the partners share the risk of debt liability for the business debt from their own personal assets. So again, I'm not a fan of that. With the limited partnership, there's one general partner that bears the debt. There can be more than one that bears the debt, where if anything goes wrong, their personal assets can be attached. And where the limited partners, that's not the case. Only what they invest is at stake. But generally speaking, those limited partners do not have a say in how that business is run. For me, I would have a problem with that. But those are options that are out there. Another option, which may not be suited for most small businesses, is a corporation. It's more formal in structure. There's a state filing for it. So it's more complex, but there is liability protection. The thing about corporations is that they're more complex, and if you own shares, then that's what you're limited to. You're limited to your investment. It's not going to attach to your personal assets. There is double taxation, meaning that corporate profits are taxed. So that's different to the sole proprietorship or the partnerships that you have. The ones that I like are the S corporation and the limited liability companies. They can have one or more members, which is cool, and they do offer you, protection of your personal assets separate from the company. The S corporation and a limited partnership are pass-through entities for taxation purposes. However, the limited liability company, you can make the election to be treated as a corporation for taxation and have that taxation done on a federal level. These are all options for you. I think that the S corporation is a great option for most people, but it's good to be aware of the choices that you have. Congratulations on your business, and I wish you a great deal of success. One point I do want to make is that when you're running your business, please keep your personal finances separate from the finances of whatever business formation you have, especially if it's involving the protection of assets, because if you commingle your money, you may undo all the protections that you're afforded. Once again, have a great day and continued success to you and your business.